So this is the typical fund structure followed by AIFs in India. And if you see here, this is the main fund, the India fund, which is a Cat 2 AIF fund. And it has an agreement with the Indian investors, and that agreement is called as contribution agreement. Now, if you see, there is similar fund which is being set up outside India, which we call as Offshore Fund, and a fund for global investors, in which there is an agreement with the global investors, and that agreement is called as subscription agreement. So in India, the agreement is called as contribution agreement, whereas in offshore, outside India locations, it's called as subscription agreement. Now, why this fund is being set up outside India is the question that typically comes up, because this fund is also directly investing in the India fund. The main reason to that is primarily to gain some tax advantage. Mauritius is one of the countries which has a double treaty with India, and therefore it comes out to be a great tax savings for the fund. And therefore this fund is set up. Even for the investors, global investors, it is a big tax savings. So now, if you see this diagram, the investors, Indian investors, will invest into India fund, and the global investors will invest funds into a global fund, this being set up in Mauritius here, and which will again have a contribution agreement with the India fund. So remember, any agreement with the India fund directly is a contribution agreement. But this agreement, which is between the global investors and the global fund, is a subscription agreement. Now, what typically happens is this India fund will then appoint a trustee who will provide the trusteeship services. And then this India fund will also enter into an agreement with the investment manager. Now, remember, this investment manager is an independent, a person or an entity. This can be a different entity formed altogether, and it needs to enter into an agreement with the fund, which is called as an investment management agreement. So investment manager or an investment entity will typically only draw the fees for managing the fund. All the fund related operations, the distribution related operations will be managed by the trustee here. And then this India fund will invest into the investee companies. So this is where the investments happen. Where people generally get wrong is they typically tend to believe that the investment manager or the investment management entity is investing in the investee companies. No, that's not correct. All the funds remain at the fund level, and it's being invested into the investee companies. Now, if you see the structure here, this structure also allows the flexibility to the investors to directly invest in the investee companies. So if you follow the dotted line here, the funds are directly being invested into the investee companies. Same for the global investors. Now, why this route is typically taken is a couple of times there are very big size deals, and investors are interested to put in more money into that particular deal, either because it's lucrative or the IRR is high. And therefore, to give the flexibility to few of the investors to invest more in certain deals, this structure is being built in.